Hey, this is Austin with Invest the Rest. Stick around, we're going to be talking about GameStop, AMC, and a few other stocks that Robinhood has blocked from trading. So, I personally use Robinhood, and for a lot of people, it's just an easy app to trade with zero fees or close to zero fees. And it's on your phone, you can be on your computer, and it's a super easy app. The problem is they they've put restrictions lately on what you can trade. And with this short squeeze going on with GameStop, AMC, and a few others like Nokia and BlackBerry, they've completely stopped trading on them right as they were really taking off. A lot of people were calling for GameStop to be up around $1,000. It hit around 380, started to trail off, and then Thursday morning, Robinhood put a stop on trading for GameStop and a few of those other companies, which has drastically decreased the price. Now, they did let you sell off what you had, but you can no longer buy into the position. So that has been a problem, even invoking some responses from AOC, Ted Cruz, and a few other political leaders. All this being said, should you keep Robinhood? Personally, I'm probably going to get rid of it. I still like it for trading options. It's still pretty decent for that. But personally, I'm probably moving to TD Ameritrade. I already have a small account over there, and they let you do a little bit more like margin trading, selling short, which got us into this problem in the first place with the short squeeze. So first off, we need to figure out what a short squeeze is. A short squeeze is when there is a high amount of people selling short on a certain stock. Now, we won't get in too much on what selling short is. All you need to know right now is selling short means you're betting on it going down. It's like buying a put if you know much about options. So when there's a high volume of people selling short on a certain stock, people can squeeze that stock, buy copious amounts of shares, get together with other people, buy as many shares as they can, driving the price of that stock up. Now, what that does is bounces people out of their sell short position, either by them getting scared, jumping out, or the broker that they sold short through opting out for them. Now, a bunch of people just randomly buying GameStop does not send it to the moon like we saw. It had a 52-week low of $2.57 and then traded at a 52-week high of $380. That doesn't just happen. And that doesn't just happen from a bunch of people randomly buying GameStop and trying to mark it up. There's no way it can get that high. It gets that high from all the people selling short and then being thrust out of their positions and in return buying the shares that they sold short back. So that's what really drives it up. So it's just a snowball effect upwards. That's why it just kept climbing and climbing and climbing. The more people that were jumping out of their short positions, the more the price would go up. The same thing happened with AMC, BlackBerry, Nokia, several other stocks. And I can see this happening a lot more in the future. The GameStop was really the first one that took off just this big and hit the headlines. It took off big enough to where everybody's been talking about it, and enough for Robinhood to suspend trading on some of these higher level ones. So Robinhood kind of screwed the pooch on this one. Wednesday, GameStop was trading at its highest. Thursday, they suspend trading, and GameStop, AMC, several of these other stocks took a huge dive, ending basically the high run-up of the short squeeze, kind of ending the short squeeze in itself. The only reason I can see Robinhood doing this is a high level of day trading going through their accounts. And I would guess the reason they don't want day traders in their accounts is it probably bogs the system down. I remember Wednesday morning I was sitting there looking at AMC and GameStop, and I remember it took forever for anything to load. So I would imagine day traders are not welcome on Robinhood for that reason. So if Robinhood is just going to keep blocking short squeezes, I don't see myself staying on there too much longer. Everybody can do what they want, but I'd like the freedom of whatever I want to trade, and I get to trade it at that moment. Personally, I think it's stupid and absurd because they basically ruined this short squeeze, but it is what it is. So now we need to move along to how can you profit on these short squeezes? Do you need to get in on the ground floor? Do you need to wait till it's peak and either buy a put, sell short, do something along those lines? Or do you wait somewhere in the middle, halfway up, and then jump in? What's the best way to make money, or even just stay all the way out of it and just watch it all happen? So It's hard to watch a stock like GameStop take like a 600% jump and then just, not make any money off of it. It is so hard. Even for me, I don't like to do it. So if you can get in on the ground floor, you can potentially see a lot of upside. If you can buy some call options or even potentially sell a covered put, just anything like that, or flat out own the stock. There's lots of ways you can make money. The problem is it is usually a dying company. If there's a lot of people selling short on a particular stock, it's usually a dying company, just like GameStop. Nobody buys hard copies anymore. So GameStop is basically becoming useless. It's the next Blockbuster. So when you try to invest in a dying company, you need to be fully aware that you could lose a lot of money in that stock if it does not start to short squeeze. So besides trying to get in on the ground floor, which can be risky and hard and trying to do all the research for that, you can just watch the forums and all the pages and try to find the next one that's starting to go up. So the only issue with that is if it started to go up a couple days ago, you hop in and then it tanks, you lost a whole lot of money. There's so much risk involved with the short squeeze, it's almost hard to stomach the amount of losses you could incur. But at the same time, it's hard to stomach not getting on the gain train. One of the last options you have of making money off this short squeeze is actually shorting the short squeeze. At the peak, that's when you can short. The only issue is the market can stay irrational for an irrational amount of time. It can hold there for several months and people just don't sell off. They have nerves of steel and can just sit there for months with a 700-800% profit, all with at a click of a button that they never enact on. That being said, you can also buy a put. The problem with a put is there is an expiration date. So either way, it's kind of hard to stomach riding the wave down because you don't know when it's going to finally turn down. Now, if you ended up buying a put or selling short on GameStop Thursday morning, you did really well because Robinhood kind of messed everybody up with this short squeeze. Now, again, I'm probably moving to TD Ameritrade. It's more for advanced traders. Robinhood is kind of a beginner level, get everybody trading, which I started on it and I love it. But I think I'm ready to move up to TD Ameritrade, especially if Robinhood is going to be pulling stunts like this. So y'all stay tuned with Invest the Rest. I'll be posting a few more videos this week on which might be the next short squeeze. And we're also going to be posting a lot of portfolio videos. Penny stock, dividend, high growth. There's going to be a lot of different diverse portfolios we're going to be sending out to y'all. So y'all stay tuned so y'all can get the scoop on what we've been researching. We got a Patreon going to be opened up to the public very soon. You can also check out our Discord that will be available through our Patreon where you can chat with peers and like-minded traders to get the latest scoop on the latest stocks. Make sure you hit that like and subscribe button so you don't miss out on any future videos and you can be one of the first to invest in some of our favorite stock picks. Till next time, don't forget to invest the rest.